So once again, SoFi is just down in the dumps with no real hope of going anywhere except down in the future. So the question becomes, is SoFi still a good stock to own, or is it a dead stock that is going absolutely nowhere ever again? And what am I doing in response to both of those questions? So let's talk about all of those questions today and get you guys the truth on exactly what's going on. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. I know it's hard out there. I know it's been a rough ride with SoFi, but we have to stick to facts and understand the truth of what's going on. So there's actually 3 core reasons why I'm hearing that SoFi is a terrible stock. It's out there a lot of different places, why it's going nowhere, why it's never going to go nowhere. So let's look at both the positives and the negatives with those core reasons right there. And then we'll get down to exactly what I'm doing, exactly why I'm doing it, more importantly, so that way you guys have that as well. So the first core reason is banking chaos. Look, we just had multiple CEOs and high-level executives at big banks basically give some warning shots per se about what's going on out there. Basically, they're saying, hey, we got Fed rate cuts coming, therefore net interest income is going to come down. You had Goldman Sachs basically saying, hey, next quarter, they see a slowdown in some of the revenues, basically year over year, down 15% or so is what they're looking at. Basically, they're not expecting massive profits like they've been spitting out for the past year plus now. And that obviously sent the market into a panic about the banks. Obviously, you saw massive moves down, especially in some of the bigger banks. They moved a lot more than a lot of smaller banks did. And so that right there was kind of a warning shot. Definitely kind of happened. It kind of created kind of chaos. What's going on out there? What are the banks trying to signal? If you kind of noticed, I kind of talked a lot about year over year numbers, if you really dug into the details there. So we'll talk about that specifically here in just a second and why we're seeing that. But coming back to it, when you have large, bank executives basically saying, hey, we're seeing slowdown in business. We're seeing some things change with our business. Some of them kind of hinting that they may need to restate some of their guidance moving forward and some other things like that. It's going to create chaos across the board. And that's exactly what we got. That's why we saw some huge moves down in those banking stocks. We'll see how it all falls out into the next coming weeks here as we kind of get back into earnings season again coming up here. Obviously, that's going to be key. But right now, we are seeing banking chaos, which of course is going to have an effect on SoFi. What exactly is going on? If the big banks are having problems, what the heck is going on with SoFi? That's a valid question that we have to have answers to. Or reason number 2, many are tired of holding the stock. Now look, there are a lot of you guys out there that have held this stock for 3+ years now. And that means, and obviously when I'm looking at it, that means you bought, really at kind of the height per se. So for you, you've held this stock and it has done nothing except go down, and continue to go down, basically from those dizzying highs up over 20 bucks all the way down to 4s. And obviously we recovered up to about $8 bucks or so, $7. Obviously right now we're getting back into the 6s again. So for you, it has been a long, hard fall over the past 3 years in regards to holding, and you're just sick and tired of holding this stock. Now that happens because you bought too high. You bought into the hype, and I understand it. We've all done it. So there's no criticism here. There's nothing like that, but it definitely creates a scenario where you're tired of holding the stock. And I've heard it from other folks too, who didn't buy those highs, but they bought it at, $8, $9, $10 or so, or maybe they have a nice average right around where it's at right now, but the stock hasn't gone anywhere for more than a year now, year and a half. I mean, we may even be coming up on 2 years here where we're basically flat or down. And that can be very, very frustrating as an investor. So for the vast majority of holders out there, unless you didn't buy a share until you got down to that $4 and $5 range, you have an average where you are actually down or break even or right around that number with the stock. I happen to be up a little bit on stock, but I was buying a ton of it in the $4 and $5 range. And we got an extended period of time to buy that. But I understand that's not where most folks are. And even though I do have a lower average, it probably still isn't all that great. I mean, we're looking out there at other stocks and you see during that same time frame where maybe I'm up a little bit, Nvidia's basically 10x during that time frame. Palantir has, 5, 6, 7x depending upon where you bought it during that time frame. Obviously even Tesla has doubled up during that time frame. Obviously Meta's, 5, 6, 7, 8x during that time frame. Google's doubled up, Amazon's doubled up. There's a ton of stocks that have had big, massive moves during that time frame that we've all held SoFi stock. So I absolutely understand the frustration there because it makes perfect sense. I mean, there's a lot of other stocks moving, and your stock that you own isn't necessarily moving. So that becomes very, very, very frustrating because I can't argue with the fact that it hasn't gone anywhere during this time frame, because it honestly hasn't gone a whole lot of places during this time frame. So that's an absolutely valid criticism as well. And that ties perfectly into number 3, which is share price is going nowhere. Look, I just showed you and we just talked about how the share price hasn't gone anywhere, right? And unfortunately, it looks like the share price is going nowhere in the future either. Basically, not only has it not done anything, the future also looks like it's not going anywhere as well. Because basically, let me kind of just lay out some actual facts for you guys. We talk about facts all the time here on the channel. Let's lay them out here. Basically, 11 straight quarters or 12 straight quarters of basically double beats and raising guidance, and the share price has gone nowhere, right? CEO has been buying up the stock like crazy the past couple of years, but the stock has gone absolutely nowhere. They shift the business from student loans all the way over here into what SoFi is now, and the stock, which is, by the way, a far better business than what it was before, and the stock goes absolutely nowhere. Hey, we're going to turn profitable. Then we execute and turn profitable. The stock goes nowhere. Turn out more EPS? Yep, you guys guessed it. The stock goes nowhere. You put out more profits, the stock goes nowhere. You raise guidance, the stock goes nowhere. It doesn't matter what they do. They have done all the things that a company needs to do to have not only the share price go up, but to appreciate significantly, and the stock has gone nowhere. So I can't argue there that it doesn't look like, at least on the surface there, that, hey, it doesn't matter what SoFi does. The stock price is never going to go anywhere. That right there, I mean, unless you can think of something outside of those things we just discussed that's going to push the share price higher, I can't say that that doesn't actually look that way whenever you look at it, that the share price is not going to go anywhere. Now, this is all well and good, and I just showed you guys, and I was honest about where those points lie and kind of what is going on with them. But there is a counter argument to every single one of them that I feel is just as important and just as fact-based as the stats that I just gave you. So let's talk about those next, and then we'll get to what I'm going to do with SoFi stock overall. So first up, banking chaos. Now for me, I care about what these guys say on their actual earnings call, not what they say at some conference there. And obviously you'd have to listen to the whole conference for the context and everything else like that. Of course, the media and of course, Wall Street is not going to do that. But nonetheless, what matters in the end is what they say on earnings. If they say this at that conference, but then they come to earnings and they don't actually adjust guidance or anything else for that, it tells you that they may have been more speaking about a particular topic. Maybe it was taken out of context, whatever the case was. The point being, in terms of legal obligation and in regards to actual guidance for the stocks themselves and for the companies themselves, earnings is what matters. So that's definitely what I'm looking forward to, not what they say at some conference or something else. Now, having said that, I think if you're paying attention at all and you understand banking at all, which I hope if you own SoFi, you understand banking, the fact that the Fed is going to start lowering rates, of course, means net interest income is going to come down because it has to come down, guys. Now, so whenever you go back to whenever the Fed started raising rates, I remember all the Wall Street experts and everybody else beat the banks into oblivion because, oh my gosh, the Fed's raising rates at the fastest rate ever. The banks are all not going to make money, which I laughed at. I laughed at right here on this channel, guys. Asked my group members. We were talking about it daily in there. We got JP Morgan right around $100. It almost went underneath $100. Goldman Sachs was my other big bank that I was buying. We got that in the $200 range, if you can believe that, because the narrative on Wall Street and what all the smart traders were doing, and of course, the media followed and YouTube followed and everybody else followed, was that the banks aren't going to be able to make money in this environment. They can't make money in a high interest environment. I'm going, that's the dumbest thing I've ever heard. That gives them more spread to play with. That gives them more ability to make money, not less ability to make money. And that's exactly how it played out. While everybody was freaking out about the banks and their inability to make money, and it's going to totally choke them off, or we're going to have all these problems, and the price of the banks got stupid cheap, well, we were buying. And then what do you know? It was like magic. All of a sudden, the banks had record profits after record profits after record profits after record profits over and over and over again, because it just makes sense. Ignore the noise, guys. That's why I ignore it all to begin with. Guess what? In this sort of environment where the rates are high or rates are low, banks have hundreds of different levers to pull profits from. That is a fact. And more importantly, banks always seem to make money in the end. Sure, there's going to be a little bit higher risk. Sure, I agree, net interest income is going to come down, but they have other levers that they can pull to make up for that, like selling there are higher interest loans out there and pulling all that money forward. Instead of that loan paying out over the course of 5 years or 10 years or whatever the case is, they can sell that at a premium and pull all that money forward to help supplement that net interest income going down. That is the way banking works. They make money regardless of whether the Fed's raising rates, lowering rates, whatever the case is. Great run banks. Now, I'm not talking about trash banks or banks that are really, really kind of, playing on the edge per se. Great, well run banks make money regardless of what's going on out there. And I believe SoFi is in that exact position. I believe they not only do they have a great team running that bank who has navigated far tougher times than some of the bigger banks had to navigate because they had to change the business basically from student loan over to what it is now. That's not an easy task to say the least. But they also target a very select customer base who is not as impacted by interest rate. They're not as interest rate sensitive as other customers are. And more importantly, they're kind of towards the upper end of the scale, which who gets hit if the economy kind of goes a little bit sour, if we get a little bit of a rough time here in the economy. It starts at those lower levels, and SoFi isn't spread like a big bank is across all the different customer bases. They definitely have a more higher end clientele, which is not going to be impacted as hard as some of the other banks will that have more of a lower end clientele. So I believe they are in a perfect position to weather any sort of storm that happens. As a matter of fact, I think they're in a perfect position to actually thrive in those particular scenarios, especially given how they've kind of balanced their loan book during this time period of higher interest rates. They just aren't going to be in the same sort of situation as some other banks are, who are going to have a little bit of a harder time as interest rates start to change. They were preparing ahead of time and they were agile and nimble enough to prep for that. So I personally love the way SoFi is positioned as the rates change. And of course, guys, I don't care. I'm going to ignore the noise, whether we're talking about JP Morgan, whether they're talking about SoFi. I'm ignoring anything that Wall Street says or the media says about it because they're utterly and ridiculously clueless about any of it. Obviously, that has proven out over time. So number two, many are tired of holding the stock. I understand this feeling completely, and I understand being tired of holding a stock. Now, my counter argument to that is this is the exact scenario you want for a great company that you want to own long term. Right. In terms of a trade or a 2-year trade, terrible. I agree there completely. But I'm not interested in doing that. I'm a long term buy and hold investor, and I want to be in the best spot 10 years from now with this stock. And for me, every single time I have gotten an extended period to add to a great stock at a very low price, I have been incredibly glad over the long run. I got a year and a half, 2 years to add to Apple a long time ago and multiple times along the way on my journey with Apple. And I'm very, very glad that I added every single share that I did because share count is what matters in the end. I would much rather own basically 10,000 shares at a $8, $10 range than I would own 1,000 shares at a $5 range if the stock goes to $20 in the future. That's what you get whenever you have that extended period of time, because it's not like you're just dumping all your money into SoFi at one point in time, unless you got a lot of money out there, right? You got to kind of build those positions out over time. And if you want to continue to give me a performing company at a cheap price, I'm going to continue to add to it. Every single time Wall Street beats this stock down for no real good reason, I get an opportunity to add my share count. Now, I already thought I was going to make a lot of money on this a lot, years down the line with the share count that I had originally back in 2022, beginning of 2023. Well, here we are in 2023-4, and I have a lot more shares than I did back then. So if SoFi happens to do what I think they're going to do in the future, although I'm not getting the appreciation right now, if I get that in the future, again, it's about where you end up in that end state at that end result. If they end up going to $20 per share, I'm going to have a lot more money in the end. That is what matters to me in the end. That's why I know this is proven out over the course of my 25 years of investing. The one thing we all say when you have a stock finally go on a big run is, I wish I would have bought more. Well, guess what, guys? You've had almost 3 years now to buy this stock at a great price. And so if you don't have the position you had, and let's say 5 years from now, it finally does what we think it's going to do, or 10 years, or whatever the number is that you have in your mind that you think SoFi can go to, if you're saying, I wish I would have bought more, that tells me you didn't take advantage of this time right now. You got frustrated by the fact that basically the stock isn't doing a whole heck of a lot right now because you got tired of holding the stock, or maybe even sold out of the stock altogether, which again, we've all done that as well. I've done it as well. It's a mistake that I've made. So for me, I've been taking advantage of this and building up my share count beyond what I thought I was going to get, which means if Noto and the management team delivers to what I think they're going to deliver to, I'm going to make even more money. I just have to be patient, which is one of the hardest things to do in the stock market, is to be patient. And number 3, share prices going nowhere. Now, for me, when I look at SoFi and I look at their journey from, basically unprofitable over here to profitable, they have played out almost exactly like most growth stocks actually play out. Get 2021 out of your head to where a growth stock goes to the moon right off the bat and it just never comes back down. That is not how it normally works in the stock market. This is actually how it normally works. So for me, this is very, very normal in a growth stock's journey. That whole 2021 hype time frame, 2020 time, you just got to get that out of your head. That is not normal. That's what happens at the tippy top of one of the greatest bull runs, if not the greatest bull run of all time. Ignore that. This is much more normal in the journey. And more importantly, you can look at recent examples of how this actually plays in your favor. And unfortunately, the narrative around the stock and the narrative that I hear among a lot of us retail investors, is exactly the same as it was around Palantir back whenever it was right in that $7 range. Basically, hey, they turned profitable. They've done all this stuff. What else do they need to do? I'm selling as soon as I, get the break even. I'm done with this stock. It's never going anywhere. Wall Street's never going to let it go anywhere. That was all happening just last year, guys. Just last year, that was the narrative that a lot of retail folks were talking about with Palantir. And they sold out at $7, $8, $10, $12, whatever the case is. And now here we are, well up over 30 just a year later. Now, I'm not trying to say that SoFi is going to have the same exact move a year from now or anything else like that. What I am trying to say is that this feeling that you guys have is exactly the same, and it's just kind of part of the game. You've got to get past that, continue to add, and understand as long as they continue to execute, you're going to get SoFi eventually get back on track and eventually move towards that fair valuation mark. That's what's going to happen with the stock as we move forward. We just got to push through this time here. Now, I'm not saying that it's going to move as fast as obviously Palantir caught kind of the AI wave on top of a lot of very, very good, raises in guidance and a lot of positive things hitting all at the same exact time. But I don't need it to go on a 5x run like Palantir has in order for it to be a great stock for me. I just don't need that out of this stock. So I'm not trying to say it's going to have the same move, but what I'm trying to tell you guys is the same exact narratives that cause people to miss out on Palantir in the $7 range and instead paying a heck of a lot more for Palantir is going on right now with SoFi. So will I be selling or buying more? All right, so my answer depends upon this truth right here. So I'm gonna hit you guys with facts, 100% truths about the stock market here. And then obviously I'll tell you exactly what I'm gonna do. So in the stock market, the history of the stock market, there has never, not one time, never been a stock where the stock price did not catch up to the fundamentals. It has never happened in the history of the stock market. No short seller has ever done it. No analyst has ever kept it in the doghouse forever. No bank has ever kept a stock in the doghouse forever. Nothing. There's nothing, no whale, no market manipulation, this or that, or anything else like that. It has never happened in the history of the stock market where the stock price finally caught up to the fundamentals. So for me, understanding that truth, that 100% always true truth, which is very, very rare in the stock market, there's lots of things that happen 100% of the time that obviously they're not right all the time. But nonetheless, this is something that is 100% true all the time. And then looking at SoFi, are SoFi's fundamentals getting better or worse? To me, when I look at earnings, they are unequivocally getting better every single earnings. Not only are they improving, but they're improving dramatically over the past 11, 12 earnings calls or so. That has been the case. All the while, the meantime, the share price has basically stayed down or flat, meaning that gap is getting larger. That gap is going to be the money that I'm going to make in this stock, and that continues to grow as the fundamentals grow. So for me, it makes absolutely no sense to not be adding to this stock, even though I have plenty of it. So I'm going to continue to stay disciplined and continue to add at my price, which is $6.69, because I'm 12 years old. I know. But nonetheless, I see no reason not to continue to add to this stock as long as those fundamentals continue to improve. That gap will close, guys. It's one of the few certain things that happen in the stock market. And if you want to see all those buys in real time, you want to see my complete watch list with price targets for all the 18 stocks that I'm targeting, you want to take 5 courses for free, get your free coaching, use our stock analyzer tool for free, be a part of the best 6, 7, and 8 figure Discord, get 3, 4, 5 videos a week from me that don't see the light of day outside of the group there, and be able to talk to me, jump on our live Q&As. So much involved in the group, guys. Check out the pinned comment, see if a membership's right for you. I may have left something special down there for those of you guys that made it this far in the video. Might be something in there for you, so check out the pinned comment. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.